Okay, end of the market wrap, guys, for Wednesday, February 2nd, 2022. In this video, I'm going to cover the stock market technical analysis. So we're going to go through just the general market, and then we'll look at some individual trade ideas and some of these earnings reports. A subscriber asked me to do an end of the market video, just given that we've got some movement in the after hours. So we'll get to that here in a second. We'll start off with triple Qs. And triple Qs, in the morning video, I talked about we had pretty much rallied to the area where I think the rally was very likely to end. If you look at the hourly chart, it's really right about here at 369.26. All right, that was former support, and we rallied right up into that resistance into the close. Okay. Now, after hours, we've got some big movement in these FANG stocks, and for the most part, the FANG stocks that's what moves this triple Qs. So we're seeing that the after hours is gapping down. As of right now, we're down at about 361.55, which is this key level. Well, it's not really a key level, but this level. Let me go back to the daily. Right here, 361. It's right in here. So that's kind of a level I've had marked out. You can see that was kind of former support all through here. I don't think it's a real key level. We've already sliced through it on this recent drop and correction in the tech sector. So I think we're likely, if we're gonna, if this was just a bear market rally, which is how I've been trading it, just given all the indications that I've seen in the technicals, I've been trading it as if it was a bear market rally. Then I think we're going to gap and continue to sell off tomorrow. Gap down and continue to sell off. Now we do have Amazon earnings after the bell, so maybe the market's not. It is very possible that the market just kind of gaps down and hangs out. So we'll need to see. The market might want to wait for those Amazon earnings to clear before making its move. And the thing is that at that point, we'll pretty much have all the FANGs out of the way. So, the market's free to kind of do what it wants to do for the next trend after those FANG earnings are out of the way. Okay, so we're down, we're gapping down tomorrow, most likely. And we'll see, and we'll be back below the 200-day moving average as well. That's kind of a key thing. We popped above the 200-day moving average just today. So we have 1 day closing above the 200. And if we sell off pretty impulsively, tomorrow we'll be right below the 200, which is right there. We'll be gapping down, and I think we'll be selling off. All right, that's what I'm anticipating. Again, I was adding to my short positions right into this resistance level, and I carried those overnight. All right, so that's Qs. Again, what I'm looking for is another leg down, and really aiming for, for one, we'll need to take out the lows. So I think if we're going to move lower, we're probably going to head straight down to the lows. Maybe in a couple days, day or two, and then you'll want to see us take out those lows. That's kind of your next indication that we're going to likely make that next move lower. Okay, on the bigger picture time frame, I just want to point this out. If we go to the weekly chart, and I know this is getting messy here with all my little squiggly lines, but bigger picture. This bearish engulfing candle that I've been talking about for at least a month now, month and a half maybe, right there on the triple Qs, that was a bearish engulfing. I mentioned that was likely a reversal candlestick, and it was. All right, we've had a correction off that candlestick. We have not taken out those highs, so I think that candlestick is likely going to hold for a longer term top. All right, that's how we're trading this right now. SPY. The SPY's gapping down, not as much because obviously, the SPY's got defensive stocks in it. We're down about, 453 it looks like. Let's go over to the daily chart. And you'll see here gapping down at 453. Really put, not much damage really. It's just putting us right here below this. But again, I talked about this level right here being where I would expect the SPY to really stop moving higher, and it's about this 454, 454-ish level, anywhere from 450 up to 454. This is the area where we had major resistance, and I would expect us to stop. Now, yes, we did close above here. We'll see how tomorrow plays out and what, how the market trades after we open. Again, it's not so much what happens in the after hours. It's really more about what does the market do with that once it opens. And let's take a look at the Nasdaq futures, because those are obviously going to be moving around tonight. So Nasdaq futures, if you look at the daily chart on NQ, this is the rally that we've been in. Again, pretty much a V bottom rally where we just fell and then just bounced right off of that. That's very common of a bear market. Okay, bear market rallies are the most impulsive and strongest rally, because when you run down and hit support, you've got shorts who are covering. In bear markets, you get a lot of shorts participating in the market, where in sustainable bull markets, the short interest is usually pretty light. So everybody kind of piles in on the short end, and then you get panic sellers and everybody like kind of selling their longs. And then when you hit support, dip buyers step in, and then you got short covering. So it creates these pretty impulsive rallies. And that's what we've seen over the last week or so, is a pretty impulsive rally. From the lows where we bottomed out here, we've rallied up about 11.5%. And I think this rally's run its course. Okay, so looking at the hourly chart, you can see here up at the highs, this is the rally we've seen. And I know everybody gets kind of sucked in emotionally, thinking, oh, we're going on to all-time new highs. We're just going to continue higher. Nobody wants to short when you're rallying, and nobody wants to go long when you're crashing. Everybody wants, and I just know that in general because of the comments that I see. So when and that's why the title of my early morning video today was Sell the Rip, because I was telling everyone, look, it's rallying into resistance. This is where you want to, sell into this strength, all right, for the next move lower. Now, if we get that next move lower, that's when everyone's going to want to short, and they're going to say, oh, we're crashing, everything's going down. So just try to just understand how emotions can play into your thought process. And again, that's why I continually refer back to my charts. I'll look at larger time frames. Everything kind of helps settle your emotions down when you just can continue to follow the charts. Now on the NQs, you've got this rally here. There's your rally, and boom, we actually broke this back. We broke this support today, and we've just been going sideways, and then boom, down she goes. So as far as I can tell, we're going to, continue to sell off throughout the night, probably wake up to a good sized gap down, and we'll see where we go from there. But ultimately, I think we're heading back down to this trend line right here at 1450-ish, right in here. Let me grab the right tool. And then we're likely going to break it, but we'll probably get a little bit of a reaction down here. They'll try to hold that, and then I think we're going to break ultimately. Okay, so watch that. That's the Nasdaq futures. That's what's really in play right now with Facebook earnings. So let's jump over to the Facebook here. All right, so Facebook. All right, so I've been bearish on Facebook for a while, and to me it looks like we're going to have a continuation of this bear flag. Down to, we'll show you how we mark it out. Okay, bigger picture on Facebook. If you look here, since the COVID lows right here in March 2020, we created this big bearish rising wedge pattern. This is a pattern that ultimately typically resolves to the downside. Doesn't always, but higher probability. It's kind of like if you're counting cards and you have in blackjack and you have a high probability of hitting a 10 or hitting a blackjack, then you want to bet bigger. And that's kind of what this is. You're not guaranteed to resolve to the downside, but a higher probability. Okay, and there's your bearish rising wedge. We also put in bearish divergence right up there. So everything was set up for Facebook to sell off. Okay, we broke trend right here on September 20th. That was your sell signal on Facebook. And if you've shorted at that moment in time, you've been profitable ever since, even with these big, counter trend bounces. Now, what this looks like to me is a potential kind of bear flagging pattern. It's not super clean, so we can't call it, a super clean bear flag, but something like that. And I think the projected target, if we kind of just measure it, is likely going to be, right there. Okay. That's your projected target, which is about 278. Okay. And that's just a level to watch through there. There's some support right in there. Not huge support. I don't think it's big support, but it's, you know, it's kind of a clean level. Here's a big level of support in Facebook, and it's right there. I should mark that out. We'll maybe tighten that up slightly. Right about there. And that's this is big support, and that is 246.05. Oh, and actually, sorry, I wasn't really paying attention. Looks like we are gapping down to 249. So we're gapping down to big support in Facebook right in here. So we'll see how that plays out in the morning. That we could get a bounce right there off that support level. Okay, let's look at these FANG stocks and then we'll wrap up. So Google obviously gapped up today. Pretty strong day in Google, but the thing that I was mentioned earlier, we made a new divergent high, and it's just been selling ever since. So I really think you've likely seen the high water mark in Google, and we're likely going to continue to sell down from here on out. You can see in the after hours that we're down about 1.5%, down to, you know, the lows of the day basically. And I think we'll probably see more selling, probably get a reaction at this gap fill area, because that is where traders will be waiting to step in and buy the dip. But yeah, that's what I think is going to, you know, I think the catalyst to move Google higher is out of the way, and we're now likely going to see lower prices. Amazon, now, and again, we take what's, you know, going on in the after hours with a grain of salt, but Amazon, the main thing I'm taking away from Amazon, and they report earnings tomorrow, but on the weekly chart, you've got the bull market trend going all the way back to 2008, and here's your bull trend there. All right, and then we broke that trend right here on this big weekly sell signal. Okay, the last 2 weeks on Amazon have been a rally into resistance just to backtest that breakdown. So there it is. There's your rally on the weekly chart into that resistance. And so far we're holding below. And in the after hours, you can see we're down to 29.07, which that puts us below our horizontal support level, which is right here. So this big sideways area, the horizontal support level on the low was right there at about 29. You know, it's about 29.30, and we're gapping down below that. So that if we gap down tomorrow and continue to sell off, that tells me that we're likely starting a bear trend in Amazon. And if we're starting a bear trend in Amazon, it's very probable that we're going to start a bear trend in this tech sector, triple Qs. And if triple Qs goes down, which is the FANGs basically, then the market's going to go down, because those FANGs move the market. And so look for that. You know, this piece by piece, we kind of put it together. But again, I want to talk about this stuff now and talk about the fact that I think we're likely entering a bear market, so that when everyone else is starting to talk about that we're in a bear market, when you start hearing about it on the news and everybody start panicking, we'll have known about this well in advance and we'll have been profiting the entire time. Okay. The reason why retail typically stays in and rides stocks all the way down is because the headlines don't flip over to bearish narratives till after the price action really shows up. So we'll be way down, and then they'll start talking about the bearish narratives in the public and on the news media. And then that's generally when the retail traders start to panic. So again, we want to know about this stuff well in advance, and we use the technicals to be our guide to give us an indication of where the probability of things going are going to be. Apple, nothing really major here on Apple. We can go to the daily chart to look at Apple, but gapping down, you know, moving lower as of right now, nothing critical. So I don't see anything that's really standing out to me right now in Apple. I really don't want to see this recent high get taken out. You know, I'd like to kind of keep that high, and if we do keep that high, then we are continuing to make a series of lower highs. So there's a high right there, and there's a slightly lower high, and if we turn down here, that will keep that intact, and we'll just look for a lower low. All right, so that's all I see on Apple. And then Microsoft, really the same story as Apple. We're kind of supports right here at 306.18, and we're above that. So need to see that break in order to, you're going to want to see this break for the market to continue to break impulsively lower. And oil, I did talk about this in the early video. So here's the uptrend line on the hourly chart in the oil futures, CL, just been trending higher. We do have negative divergence on the hourly chart that's been building, and we are right at support. So we hit it earlier this morning and, pretty much closed the day right at it. So again, if you wake up to a breakdown in oil and you've got a breakdown, on this trend line, then you're likely gonna start to see the S&P 500 start to sell down as well. So things to watch for, because oil's been one of the strong sectors. If we start seeing strength break down with tech, then we're likely going to see a broad-based sell-off in the markets. Shop reported earnings after the bell. They're down almost 7%, coming back down to the lows down here at about 8.17. So what I'd look for on this one, I think this is going to go lower. That's my, I would anticipate that, but probably, we got this trend line to watch, and we're sitting right there. So, I would look for that to hold or break. If that breaks, then you're likely going to head lower. And the next level of support on shop, this is a big level too, that's gapping down. We closed right there at 884.77. You can see that's a really big level of support. And when they close the day right there, and they're gapping down, so likely trapping. If anybody was bullish all through here and they're still sticking with the stock, we're going to gap down and trap all that long money. And again, this is where the bulls were stepping in trying to buy it right at support, but they, it's going to gap down with bad earnings. That it's likely going to set us up to move to the next level of support. It's about 705.90. And then we have another level down here at 599, about 600. Okay, things to watch for on that one. And Spotify, also bad earnings, down 10% in the after hours. So really where I see us heading, this looked like a bear flag to me right here, kind of a flag. And I think we're going to continue down to the next levels of support, which is about 153.04. That's pretty good support. You can see that was resistance all through here. Lots of tags of that. We overshot it a little, so you might want to give it a little bit of room. We might undercut this. But to me, it looks pretty probable at this point, since we're down here in the after hours at 173, that we're likely going to continue to sell off down to that level. And that's quite a bit of ways down there. From where we're at, that's still another 11% to the downside. And yeah, we'll probably start to look for key levels of support and, signs of bullish divergences and stuff as we approach these lows. Okay, so I'm going to wrap up here, guys. Leave me a thumbs up. Check out my stock market technical analysis course. I talk about all these concepts in about 4 to 5 hours of video trainings, and I kept the price at $99, so it's affordable to all. And we'll leave the markets in the hands of the futures now. So I think likely you're going to see these Nasdaq futures traders sell this thing down overnight, and likely going to wake up to a gap down. Okay, catch you guys on the next one. Bye.